As the stock market rallies, Adobe stock is being left behind. The company's shares are down almost 24% year to date, while the S&P 500 remains in rally mode. In this video, I'm going to take a microscope to Adobe shares and understand if this stock is a buy, hold, or sell at current market prices, viewing the company comprehensively. Let's jump right in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
As I mentioned, Adobe stock is down 23.81%, almost 24% year to date. And as the stock market rallies today, Adobe stock is only up 0.42%, while broader market indices are up closer to 2.5%, and 1.6% for the S&P 500 index. Adobe over the longer term has demonstrated excellent revenue growth, but investors are becoming more concerned about competition in artificial intelligence. Investors and Wall Street are not confident that Adobe is making the right investments in artificial intelligence to withstand increasing competition from competitors that are incorporating AI more rapidly and more comprehensively. Adobe's revenue has grown from $4.8 billion in 2015 up to $23.2 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 17.5%. In recent quarters, Adobe's revenue growth has accelerated, but it's still below the rate of the compounded annual growth rate over the previous decade, so its growth rate is slowing down. Still, the company is growing roughly double digits. The industry overall is growing, while admittedly Adobe is losing market share to companies like Canva and Figma, who are incorporating AI and attracting users, especially beginner users, more quickly than Adobe is. That being said, Adobe has increased its revenue and its business prudently in a way that's expanding its profitability robustly. The returns on invested capital have increased from 14.1% in 2016 up to 26% in the most recent trailing 12-month period. This effective allocation of capital gives me confidence, or reasonable confidence, in the company's management team to adjust to the challenges it's currently facing. Adobe has the capital, the cash flow, and the profitability, the profit margins, the customer relationships to invest in research and development to meet the current challenges. It's a matter of investors and management doing so effectively, not getting caught up in the AI hype and just over-investing just because that's what investors and Wall Street are looking for. As I mentioned, the company's profitability is robust and the cash flow from operations to sales is among the best of any of the companies I'm following. Adobe secures $42 for every $100 in sales it generates in cash flow. Its OCF to sales ratio has increased from 31% in 2015 to 42% in the most recent trailing 12-month period. Even though there's been volatility between this time, overall, if you draw a trend line from 2015 to 2025, this figure is increasing. This is one reason why I'm confident in Adobe's ability to adjust to the changing circumstances. It has the cash flow. It just needs to make a policy change if it sees it prudent to invest increasing amounts in research and development to create products and services that their competitors are incorporating and finding that customers are liking. So Adobe doesn't need to be the leader in these new innovative technologies. It can afford to be a follower because it has the capital. It has enough money where if one of its competitors proves a certain technology is working well, then Adobe can adapt and quickly incorporate that technology because it can invest so much in research and development and technology development and catch up because it's such a large player in its industry. Remember, I shared with you the company generated $23 billion in trailing 12-month revenue, and a significant percentage of that turns into cash flow. So even if it increases the rate of reinvestment in research and development and sales and marketing, perhaps, to incorporate its technology. But I don't think sales and marketing is the issue here. I think Adobe needs more investment in research and technology and research and development to incorporate these newer technologies that competitors are adapting. That's proving to be valuable to customers, to end customers. So I think the company has the capability and it's theirs to incorporate, right? So they have an opportunity and the market is not confident in their ability to adapt to these changes. The stock is trading at the cheapest valuation in the previous decade, right? Look at this. This is remarkable. Adobe stock is trading at a forward price to earnings of 14.82. And if you go all the way back to 2016, this stock has never traded at a valuation this cheap, going all the way back to 2016. So if investors are interested in Adobe stock, it hasn't been this cheap in a decade. Of course, it's facing greater risk than it's faced, but arguably the risks are not as great as the company was facing in other times. This isn't the most substantial risk Adobe has faced in its history, and I think the management team can be given some rope here to adjust to these changing circumstances. Of course, it's not certain that they will, and that uncertainty is increasing the risk. But as I mentioned several times, as financial professionals, well, you might not be a financial professional, but you might be an investor. And I teach this to my university students, so I'll share this lesson here with you all. As investors or financial professionals, we should not be afraid of risk. But what we should do is incorporate risk, be aware of the risk that we're taking, and make sure that we're getting compensated for the risk. Okay, that's the big thing, is to make sure that you're getting compensated for the risk that you're taking. So Adobe right now, admittedly, is facing a great degree of risk. Competition is innovating rapidly, and artificial intelligence threatens its market share. Okay, so those are big risks that could derail the company's revenue growth and profitability and cash flow. So if it was trading at an average valuation, then I would be very hesitant with investing in Adobe stock. But it's not trading at an average valuation. It's trading at the cheapest valuation in a decade. So it's accounting for that risk, right? The only reason why it's trading at this cheap of a valuation in a bull market that's been in a bull market for 3 years, where stocks have been in rally mode, but Adobe stock is down 24%, it's because of those risks. That's why you're getting this business at this price. So it's accounting for the risks. So you're getting the lower valuation, which means it has more of an upside because you're buying it at a lower price. And so it has the upside there because of the lower valuation. Now, this is just one perspective on valuation. I also calculate a fair value using my proprietary discounted cash flow valuation model, which calculated a fair value, and I updated this today for Adobe at $418 per share. The current market price is $338, trading near its 52-week low, which is $330. So whether I look at valuation on a forward PE basis or whether I look at valuation on a discounted cash flow basis, Adobe stock looks significantly undervalued, more than accounting for the elevated risk that you're taking with Adobe stock. So if you're the type of investor that's risk avoiding and you don't like to take risk, then Adobe stock is not right for you. You might look for companies that are less risky and have less volatile business streams like Pepsi or McDonald's. But if you're not afraid of risk and you're willing to take risk as long as you're getting a good value, then Adobe stock is right for you. It's trading at a valuation that gives you a good upside for the risk that you're taking. So I'll reiterate my buy rating for Adobe stock today. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.